Well, good morning or good afternoon, everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong, and I am back. I've been traveling a lot for the last couple of months, but I am back. I'm actually putting my suitcase away, so you guys are going to be stuck with me now for pretty much the entire month of May. If you're not following me on X, I encourage you to do so. My handle at Barb Armstrong CS. We have Mike Fairborn with us in the chat. He is a friend and fellow coach, and he is an awesome guy, knows a ton about the markets, and you'll want to be following him as well. Mike Fairborn CS. So if you've got questions as we go along, feel free to type them into the chat between Mike and I. Hopefully we'll have answers for you. What are we going to talk about today? Well, I started looking at charts this morning. Well, spent 3 hours looking at charts actually. And I am seeing diagonal resistance breakouts everywhere we speak. And some are bullish and some are bearish. So we're going to, we don't have a ton of positions on in our account right now. So we're going to look at kind of filling up our paper money portfolio. We're going to do a couple of bullish trades and a couple of bearish trades. So here we go. Now, for those of you who were at the live in-person advanced option workshop in Dallas last weekend, I got to meet a whole bunch of you, and it was absolutely fantastic. So thank you to each and every one of you that came up. If you have never been to an in-person event, I encourage you to check them out. And you can go to schwab.com/coaching. So it's very easy to find, and you're not going to come to live webcasts, you're going to come to in-person events. So if you're saying, how do I get myself to one of these? Well, if you live in the Denver area, it's pretty darn easy, because this Friday, Saturday, Mr. Ben Watson and Kevin Horner will be there, along with our fantastic in-person events team. Ray Kimbrell and Scott Durfee will be there, and Gifty. And so all you have to do is click this button and sign up. We'll provide breakfast and lunch. And these are great events. This is a technical analysis, intro to technical analysis and options workshop. Anaheim is then, if you can't manage to get there. And people flew in from all over the country for that event yesterday. I was so impressed at how many people had come such a long way to attend that event. We have one in Anaheim, so very close to the Disney property, just saying, if you wanted to kind of multitask. And that's another 2-day advanced option strategy. I will be at that event. And then we've got 2 one-day events, market drives, one in Miami and one coming up in New York. Kevin will be in Miami. I'll be in New York at the end of June. And these events, if you're not familiar with them, they go from, what's going on globally in the markets to what's happening in our own US of A with tariffs and with our markets, down to how is this influencing the sectors, down to here's an example of a stock and how one might place a trade on it. Okay, so it's big picture down to, and here's how we can take advantage of that, within our accounts. Okay, so, and these are free to attend, but sign up quickly because these events fill up fast. All righty, so back to our regular programming. There's my, my commercial for the day. And I mean, these things, they're free to attend. So, I think that's pretty fantastic. We do a lot of options in our Trading a Smaller Account class. Know that options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges with Schwab, and not all will qualify. We use the Paper Money software application on the thinkorswim desktop platform. It is a brilliant place to learn and hone your skills. Know that there are some nuances and differences. One is that in Paper Money, short option positions will never be assigned early. That can happen in a live account. And have I seen it happen? Yes, I have. So it's important that we recognize that, right? So we're going to go out, we're going to do a very quick market overview. Now, at the market open each day, or pretty much every day, Kevin Horner kicks off our webcast day and does a really in-depth look at what's going on in the market. So I have cropped what I do in these classes so that we have more time to place new example trades. But we'll have a quick look at what's cooking in the market, and then we'll do a little bit of trade management. Today we'll do less trade management than we typically do, but get ready to see that gear up as we replenish our bucket of example trades. So let's start with the S&P. And, you know, we're down 7% year to date, but at one point from February 19th, oh, dang it, got to come up this way. You know, we were down over 20, like in bear market territory. And, you know, that's not nothing. And we've set up kind of this big pennant pattern, and it looks like it's broken above this potential resistance level. And today it's pulling back. So, you know, what does that mean for the trend? Well, you know, it could mean, and some, I'm just going to get rid of this line. You know, some might look at this and say, well, if we're looking for a diagonal resistance breakout, and if we just kind of start here, we still have that. But is it going to hold? And only, you know, the jury's still out. Right now, we've got a bearish engulfing pattern on this candle, but who knows where it will be by the end of the day. Now, when we look at the NASDAQ, it too was in definite bear market territory. And from February 19th, you know, we're still down 13.5%. You know, so that's not nothing. But again, similarly, we had a diagonal resistance breakout. It's now above the 30-day moving average, which we haven't seen since the end of February. You know, so the bulls might be pointing that out, but, you know, we might also say, well, we had 4 up days in a row, and it looks like today might be the end of that little run of up days, okay? And when we look at the Dow, similar story, right? Although with this one, we're not above the 30-day moving average. And, you know, if we look at this, I'd be looking kind of this double bottomish pattern. It's not broken above here. It was coming up and kissing it. And our VIX is still elevated. Now, it's come down a long way. But, you know, at 26, like if this is a 1 year, well, this is a year to date. So let's go to a 2 year. I mean, we're still, if I move this down to our 2630, which is where it is now, like we have seldom been this high. You know, 1, 2, 3, 4 times we've been above this 26 level. So what might that mean? Well, you know, it might mean that, you know, we want to consider selling strategies because premiums are going to be richer if we're looking at options. So let's come and look at Crocs. Now, having said that, the first trade I'm going to suggest is, you know, perhaps buying a put. And this is Crocs. And you know, we talked about Crocs. Well, we talked about Crocs the last time that James Boyd was in the class because he had done some work in his yard and was wearing Crocs and ended up with a polka dot sunburn on his feet from the little holes in the Crocs. And so we were teasing him about that. And, you know, we used to say, don't mock the Crocs, but we haven't talked about Crocs as much of late. But year to date, it's down 12%. You know, it's been on the struggle bus for quite a while, but it's been kind of trading in this range. And then it got up to the 30-day, and this time it didn't even close above. Now, we've got earnings coming up on May 8th, so that's next week. But, you know, today we had this come up on Friday. We had this inside day, and, you know, and also, you know, this candle indicating that this little uptrend may be over, and today it's it's moving to the downside, down 2.3%. So could we buy a put? And we don't want to be in this necessarily over earnings, because as we can see, this stock can gap, like it gapped up here, and let's go out a little further. It made a dramatic move here, dramatic move here, dramatic move to the downside here. So when you have a stock that has a tendency to gap, and given that we're not psychics, maybe we just are saying, well, we could see this pulling back for another day or two. So this is a very short-term trade that we would anticipate being out of by the end of the week. Yeah. So if we look at this, and what's our current price? 95.32. So how would we set this up? Well, let's come here and switch our gadget to a scratch pad. And this is going to be, we're going to do a couple of ETR examples. This one is bearish, and it is Crocs, where our one ATR, so I've added this ATR to the chart, and our current ATR on this is $5.68. And what does that mean? It means that in an average day over the last 14 days, from top to bottom, from the high of the day to the low of the day, the range has been about $5.68. So if we look at that and we say, okay, well, what would a target be then? Well, we're going to take our current price, which is 95.26, and we're going to subtract that 568. 568. And let me get out my little calculator. So 95.26 minus 568, that's 89.58. Feel free to check my math. And then our exit would be if it goes above today's high, and today's high is 98.12. And then we would add our 568 to that. And that is 103.80. Okay. So how do we put this trade on? Well, we're going to come to the trade tab, and we are going to come out to June. Why June? Well, because we've got lots of contracts here in June. We could come out to even maybe the May 30th, but we don't have much volume here, and we'd rather have more liquidity. So we have a really wide bid-ask spread on these. So they just these don't meet our example trading plan of, having at least 20 times the number of contracts. And if we come out to May, 18 days, time decay is going to really kick our butts. Now, do we intend to be in this for 53 days? No. If all goes according to plan, we're going to be out of this by the end of the week. Now, sometimes we'll do the first strike in the money or the at the money strike. We're going to go further out of the money. Why? Because we don't want to risk more than $500 on any one trade. And so these aren't in our snack bracket. And so we're picking this strike because I know I'll get this question, how did you get this? Why did you pick this strike? It's because that's the strike we can afford. There's another question saying, where did the 98.12 come from? Well, if I came to the chart and I hovered over this candle and then look at the top here where it says high, the high for today was so far 98.12. So that's where that came from. Tatiana is reminding me that we're close to earnings, and you are absolutely correct. It's May 8th, which, let me grab my calendar. And now I have to flip to May, which is next week. So it is next Thursday. We will not still be in this trade next Thursday. We are going to be out prior to earnings, but we meet on Wednesday of this week. We meet on Friday. We meet next Monday, and we meet next Wednesday. So we have 4 opportunities in class to close this out if it doesn't hit our target. Okay, so we're going to come to our trade tab. We're picking the 87.50 strike. We have 254 contracts. We have a 20-cent bid-ask spread, so that meets our requirements. We are going to right-click, and we are going to buy. And we're just going to buy a single. And this is just a different way of putting in an OCO order. We're going to change single order down here. Why is this not coming up for me? Okay, this is weird. Okay, I guess I'm going to have to do this a different way. I'll have to look. So we're going to buy custom with an OCO bracket. And then we're going to make these good till canceled. And we're going to actually make both of our exits market orders. Okay, and then we're going to come over here, and the first thing we're going to do is put in our target. Now, our target is 89.58 because we're bearish. It's the lower number, 89.58. Okay. And then we're going to come to our second, and it brings up, when we click on that little sprocket, it brings up this conditional order. And our exit is going to be 103.80. Now, if it doesn't hit our target tomorrow by the end of the day, we're going to come in on Wednesday. And so if you come to trading price patterns on Wednesday, we'll demonstrate, if we're still in this trade, how to adjust this. And where are we going to adjust our exit to? We're going to adjust it to 50 cents above the high of yesterday, the high price at yesterday's close. Because if we're wrong and this starts going up, we'd rather get out sooner rather than later. Okay, so when we hit confirm and send, it'll bring up our order confirmation box. And I will read these out loud to myself if I'm placing a trade in my live account. Now, even in paper money, which is what we're doing here today, we want to buy a put because we're bearish, right? Right. At $4.70, is that less than 500? Yes. When do we want to sell? Well, when it hits our target of 89.58, correct. If it's at or below 89.58, check. Or if it's at or above 103.80, check. Now, this is saying we could make up to $8,280. Yeah, like that would be if Crocs went to zero by June 20th, but we're going to be out long before that. We're going to be out if it hits 89.58. But we could lose this entire 470. You know, there's a transaction fee to get in, and this is going to be put in our long put group, and we're going to make a note that this is a 1 ATR target and exit. Okay. Okay. Fire in the hole. Well, I can't believe you're late. Also, I can't believe you weren't in Dallas with Riceberg, who I got to meet finally. And Frank is late as well. What is it with Mondays, right? Okay, so that's our first example trade. Now, the next one we're going to look at, and Crocs is in what category? If we come to the Analyze tab, when we come to Fundamentals, Consumer Discretionary. Now, some people might consider Crocs a staple. I mean, you say tomato, I say tomato, you know, but, you know, and that sector has been getting hit pretty hard. Yeah. Okay, so let's come and look up Marvell. It's a marvel that we're all here on a Monday, right? Right. Okay, so when we look at Marvell, here's a 1-year chart. So this was kind of rolling along tickety boo, but year to date down 48.9%. Like, oh, like that's a lot of pain. And so if we come in and we look at this a little more up close and personal, since this, January 23rd, this thing, has only come back above the 30-day moving average once. It gapped down, tried to rally, and this is that example of, is this a breakout or a fake out? Broke out, nope, fake out, and it's just kept on falling. Hasn't crossed back above the 30-day moving average since. Now, I looked at this morning, and so Stream of Consciousness by Barb here, I'm thinking, well, this is kind of a trend continuation. It came, hit its head on the 30-day moving average, and then moved down. But if we look at this, and then I'm looking at it and going, yeah, but we had a lower low. We had a low, which was a lower low, and this is a higher low. So maybe the trend is changing, and it's like, yeah, maybe not. And so how might an investor or a trader trade maybe, maybe not? And if you're saying, well, it's hit the 30-day moving average and rolled over. It's also, if you look at this diagonal resistance line, hit this line and appears to be rolling over. So could we do a 1 ATR? And what's our ATR on this? It's 434. So if we say, okay, so, and again, this isn't a perspective on the long-term trend, because there could be a trend reversal or could be a trend continuation, but if we say, okay, Marvell has a 1 ATR of $4.34. And if we did a target on this, what was the low today? Well, a little lower than where it is right now, but not much, 56.77. So if we say, okay, 56.77 minus 434 equals, and feel free to correct me if I get the math wrong, this is part of this pesky being a human being thing, 56.77 minus 434, 52.43. Okay, and then our exit would be if it goes above today's high. And so our exit is going to be today's high, 58.87. And again, I'm just hovering over the candle and looking at the top part of the chart, plus 434. And that equals 58.87 plus 434, 63.21. Okay. So again, how do we trade this? And have you noticed we're doing a lot of hugging a porcupine? We're trying to trade very carefully, and very short term, because there's been so much whipsaw in the market. I jokingly say, I think this year, like about 3 years ago, has been sponsored by the American Chiropractic Association, because we're all getting whiplash. We're being whipsawed around so much. So, and again, if we come out to June for kind of the same reasons, although we've got, so let's look at the difference. So if we look at this at the money strike, the difference in the bid-ask spread, you could drive a truck through that. Now, if we went to the 55, that's 10 cents. That's not bad. We have 66 contracts. We're going to pay a little more if we come out to June. But, so if we look at this 55, it's 485 to 5, but 5,000 contracts, 4,000 contracts. At the 52.50 strike, 9,000. So we kind of, one of the things as a retail trader, you kind of want to run with the crowd so that when you want to exit the position, you've got more liquidity. And so this is one of the things that can be appealing. But either way, we're only going to do one contract. So if we look at this and say, okay, we want to buy, buy, And we're going to buy custom with an OCO bracket because we're putting in both our target and our exit. We're making this good till cancel, both of these. Both of them are market orders because they are what? They are based on, dang it, I'm just having trouble getting my cursor to go where I want it to go. Okay, there we go. So sprocket. And we always put our target in first. Do you have to? No, but it's just repetition. So, and our target is for it to go down to 52.43. Now, if it comes down to 52, 63, might we choose to exit the trade? Yes. These are not set it and forget it. Oh, you know what? We aren't putting the second one in here. I'm going to cancel that. I'm so used to doing it the other way. Okay, there's our target. If it goes at or below 52.43. $52.43. So that's the first one. And move this up a bit more so we can come to the save. And then the second one, if it goes above 63.41. And again, if you come to trading price patterns on Wednesday, I treat it as a companion class to this class. If we haven't hit our targets on this one and the one we did on Crocs, then we will demonstrate how to adjust our exits on these. So if Marvell goes below 52.43, 52.43, where is it? 56.90. So that makes sense. We are buying a put because we're bearish, right? Right. We are exiting the trade if it goes above 63.21. It's at 56.88. Does that make sense? Yes. But saying our max profit 5,000, again, that really isn't relevant for us because we're planning on exiting this position when it gets to 52.43. But how much could we lose? $500. Now that is relevant. Well, it's not that the other one isn't relevant per se. It just, we're not planning on hanging around. So this is a 1 ATR, target and exit. That's just a note from us to us. Okay, so let me go and just look at our strikes. Where did we look for ATR? So it's on the chart at the bottom. And if you don't have it on the bottom of your chart, you can easily add it by coming to your studies and edit studies and then type in ATR. It's right at the top. So you don't actually even have to type it in. And if you want a more complete definition of what ATR is, just click on that little question mark and you've got a really, detailed description of what average true range is. Okay, and then so we've added it to the chart. So you want to add selected and then hit apply and OK. And I'm not going to add it because I already have it in there. So that's where we did that. Where did we look for ATR? Someone said it's like trying to swim in a hurricane. Yeah, like this year has been an interesting year. Yeah, so the spread on Crocs, it did meet our requirements on the monthlies. Yeah. Yeah, the difference between the bid and the ask is what the market maker makes for, he's kind of like the matchmaker between the buyers and the sellers. How am I picking these specific stocks? Am I running any scans? And I did not run any scans today. I often, I will often bring up a watch list, and I didn't do that today, but I will often just bring up a watch list and sort alphabetically and just link my watch list to my chart and just start clicking through. Today, like just not specific at all, but what I was doing today was clearing off my desk and picking up all the pieces of paper with ticker symbols that I've written on them and creating a new list. And so today's list, this was, you know, diagonal resistance breakouts. There were a whole ton of them, you know, at 6 o'clock this morning when I first started looking at charts, but a lot of them have earnings coming up. So we look at Spotify, for example, you know, we've got a diagonal resistance breakout pulling back today, but earnings on that is tomorrow. We've got Oklo, you know, and again, this one looks like this is another one that looks kind of like the last one we just looked at, Marvell, right? Where it's been clobbered, but we have a higher low. And when I looked at this first thing this morning, it kind of looked more up than it does now. So, you know, is that another one that we could trade this way? We have earnings on the 15th. So that's enough time to maybe do a 1 ATR trade, but some might argue not enough time to do a long call vertical or a long put vertical and get out prior to earnings, or a short call vertical. You know, so I didn't, on that, today I didn't look at a specific watch list. Now, sometimes, like I teach an after the close on Thursdays where we're looking at building a portfolio. So there, what we'll do is we'll come to look at the sector indices, and then we'll say, okay, which sector has been the strongest over the last 3 months? Spoiler alert, consumer staples. And then we ran a quick scan to bring up all the stocks that are part of consumer staples, and then clicked through that list. Yeah. Are we still in Dollar General? I think Dollar General. Well, let's look at the chart. Did we have an iron condor on Dollar General? So here's a stock that had been clobbered. You could see that from the 200-day moving average, which is still downtrending. But since it hit this low here, when was that? January 17th, it's really been uptrending. And so if you're thinking we don't have earnings here till the end of May, you know, here's one that you could consider adding to a portfolio, but say, you know, only if this pullback is complete. We're still a higher low here, but this is one where you might place a conditional order. But I don't think we're still in Dollar General. So let's come to our trade tab, actually monitor tab, account statement, Dollar General. It's not showing anything here. So if we did a Dollar General trade, it would have been in the other account. We did have trades on Dollar Tree. We did iron condors on Dollar Tree. So, and now Dollar Tree is breaking out. So it had been trading in this range since last September. You know, if we come to a 9-month, like since last September, and then it recently broke out. So crossed the river, it looks like it's coming back to test the ice. And then when we're on the other side of earnings here, and, you know, it's gone from say 61 to 77. So a technician might say, well, I'm going to add $16 to this 77. So 87, my target on this would be 93. And today's candle, this inverted hammer, might be suggesting, you know, that this pullback could be drawing to a close. So we could keep this one on our watch list and say, hey, if this swings to the upside, we could either buy some shares of stock, because we have a lot of money sitting in cash in our account. Ooh, excuse me. You know, we could buy some shares, or we could do a long call vertical. Oh, excuse me. Yeah. Yeah, so we're going to keep that one on our list, but today it's still it's still pulling back. So someone else is asking, is there a video to understand the trade you placed? So if you are not familiar with long puts, let me just bring this up. So here's my second commercial. Trade management. So if you come to the Trader Talks channel from Schwab Coaching, when you first get there, what will appear is whatever is currently being broadcast live. And right now, that's this class, this trading a smaller account. If you come to playlists and then scroll down, under the trade management mini sessions, there are example trading plans. And one of them is long calls with one ATR target. So you could look at that and basically you're going to flip it and reverse it. I just haven't got to doing the long put one yet, but it's for an example trading plan, the premise would be similar. It only, it's bearish. The other thing that you may want to do if you're new to options is to come to the Getting Started with Options series and look for the class on long puts. So Getting Started with Options. I taught this one for a lot of years. And so you're going to look for long puts. Here's lesson 2, long puts. And Cameron May has one here. And then if you want, another version of it, you can scroll down. Here's another one, long puts, a bearish strategy. So yeah, if you want to better understand the strategy, you can do that. So Laura is saying she missed the Dallas event, but she'll attend the one in September. I'm hoping to be at that one in September as well. Okay, I think I've got all the questions. Yep. Okay. Other one did we want to look at? Do you want to look at a bullish opportunity perhaps? Now, I had a long list and most of them were bullish setups. And then the market started pulling back. And so, sometimes we just, like Dollar Tree today, there can be a little bit of hurry up and wait. And so when we look at Broadcom, and we're seeing a lot of these types of patterns because the market has been getting hammer smashed, right? And if the S&P is going down and the NASDAQ's going down and the Dow is going down, well, the stocks within them are going down by definition. And so we're seeing a lot of these diagonal resistance breakouts. And, we're seeing, a stock that in the last 14 trading days is up 39%, even today, 36%. It's had a $50 move since this low on this day, and it has crossed this diagonal resistance line, but today it looks like it's pulling back. So if we wanted to be preemptive, okay, if we wanted to be preemptive, what could we do? Well, we could say, okay, today's high is 192.87. And this is kind of an expensive stock. So I thought, well, could we do a 1 ATR on this? But if we come out to the monthlies, like these are really expensive. We'd have to go out to the 215. We'd have to go way, way out. So maybe could we, instead of going 50 days out, if we came out 23 days, and this, doesn't give us as much time, right? Like if we're right, great. If we're wrong, we don't have as much time to recover. But if we said, okay, today's high is 192.87. So if I enter at like, let's say I add 20 cents to that and say, I only want to enter if it goes to 193.07 or above. Could I come out here to the trade tab and do the 190, and I'm going to do a long call vertical. So if I buy the 190, so we're buying a vertical, and then sell the 195. So right now it would cost me 230. But I know it's going to cost me more than that because today it's pulling back. So I'm going to make this a market order because I don't know quite what the price is going to be. Now, if I don't want to put this in ahead of time, I could also just put in an alert, right? But I'm going to say I only want to buy this vertical if and only if AVGO, if Broadcom goes above 193.07. And if it doesn't, we are not getting in. Confirm and send. And how many of these are we going to do? We're only going to do one. So once we get the notice that we're in, then we'll put our target in. And we could choose to add another contract. But if we don't want to risk more than 500. So this is a way to try and take advantage of it without putting ourselves at the risk of position sizing inappropriately. So we're going to put this a long call vertical, and this is with a conditional entry. Okay. Now, when we look at our monitor tab, and I know that we're due to wrap, but if we come to activities and positions, so we did 3 trades today. 2 were bearish, 1 on Crocs and 1 on Marvell. And, these are both were directional trades with long puts with 1 ATR targets. And then we did a conditional order on Broadcom, ticker symbol AVGO. That's a potentially bullish trade. Now, so we see this AVGO teed up here and our 2 new positions on Crocs. And what we have in the hopper is a lot of short call verticals, which are bearish to neutral. We're underwater on all of them. But what do we notice when we look at the profit and loss on the day? Well, Adobe, we're under by $40. So, that's not a huge amount. But all of these others, today we're chipping away at this loss. So this tells us that ADI, AMAT, Home Depot, and Target are all falling. And when we come and we look at some of these, like ADI, here's our short call vertical at 195. We want it to stay below 195, and it's trading at 191. So it's not like, we just have to be patient. So we're trying to be patient here. Here's our short call vertical at 150 and 155, and it is below our strikes. Okay. So guys, that's a wrap for today. I appreciate you being here. Please hit the like button. What it does is it lets Mike and I know you found this content valuable, but more importantly, it helps move this up in the YouTube algorithm so more people can find this content. Subscribe to the Trader Talks from Schwab Coaching if you haven't done that already. Don't forget to follow us in the land of X, Barb Armstrong CS, Mike Fairborn CS. Just know that we'll never reach out to you and offer you some kind of crazy Bitcoin or crypto deal, or we won't offer to trade your account on your behalf and split the profits. I've seen that one too. These are scammers. The real deal will not reach out to you and suggest that. And so, guys, stay tuned. There's lots of great stuff coming up. Next up, Mr. James Boyd. So stay tuned for that. I'm teaching Connie's ETF class today at 4 o'clock Eastern. It is not archived. So if you want to see what I have to say about ETFs, you'll have to show up live. Take care, everyone. See you soon. Bye for now.